Welcome back, folks. Good evening. We are back again for the first week. Now, I will call this week probably the first week of February 2024. Well, I wanted to say something, but let's go this way. You know, you knew I'm trying to talk to you as a person right now. You knew all the plan you have had for yourself. You have promised yourself what everything you want to achieve this year. I don't know, some of us, let me not say some of you, let's say some of us you don't even have a plan for the year before you now break that plan into monthly, before you now break that plan into weekly. Although God did it things the way He wants to do it, but sometimes you need to work towards a plan. You need to have a schedule for yourself, what you are working towards, and how you intend to get there. So those kind of things are very, very important in the grand scheme of things. So you need to position yourself to be able to achieve that specifically. Why I'm bringing this up is that if you look at this market right now, it is it's quite like amazing and disturbing. It can actually deal with it can actually deal with your emotion, and it can mess your mental health up if you don't know what you are doing. So that is basically it. And why I am talking about having a monthly and even yearly plan is because if when you have this plan, you make it a realistic something, so that you can give yourself the space to overcome whatever you want to do. You need to give yourself that space to understand. So you break it down to daily, whatever you want to do every day, so that you can achieve everything you want to do before the times end up, right? So even if you don't achieve it exactly, but you will get close to it. So this is my YouTube channel. If you are watching this from either TikTok or Facebook, so you just follow my page and go to my YouTube channel, and you can follow me on WhatsApp as well. So you can learn more about this, or you can get my daily market review video. So what you are looking at right now is currently this is the Euro US dollar daily contract. So I'm using trading view for this every day. So I will begin like this. The Euro US dollar daily contract for Monday 5th of February 2024 deliver nicely as we call out uh last week. Okay, not yesterday, it's last week, because our last video was Friday. So it was called out last week, Friday. Then I am very pleased to see euro delivered lower and forming equal low with the weekly internal range liquidity sell side, which is the sell side liquidity in today price action. With how euro close today, we can still expect more lower prices on euro. Now, being that we did not sweep this low completely, this particular low is what I'm referring to as the internal um what I call it the weekly internal range liquidity, which I if you go to my previous videos, you will see how I have been repeating that area. So we did price to, but we didn't take it out. And the way we close today, if this should be a liquidity sweep, we are supposed to sweep it and start delivering higher prices, but we didn't sweep it and we close very close to the low of the day. So the way the candle of today close implies that there is still more lower prices to see. But since if we go below this particular low, then we are now trading inside the monthly fair value gap. All right, the monthly what fair value gap, which is a BC. So I don't know how far that fair value gap could drive us to, maybe we could see a retracement before going lower because I still project more lower prices. And going forward, we have this daily sell side liquidity here, and after that, we can now look at this fair value gap. Then, if all this did all the if this fair value gap did not hold, which is a BC, did not hold price, then we are coming for this monthly external sell side liquidity. So that is basically it. You don't need to think about all this area yet. What you need to focus on is this area. What is going to happen tomorrow? Well, tomorrow I still favor bearishness in the dollar. Now let in the euro. Now let me explain something. Now, if we rally lower during night in the night, like let's say in the night, we rally lower, taking out this equal low before London session tomorrow. Then I might anticipate a short time reversal during London session. Then the New York session will now uh, expand it lower. I don't know whether you get that concept, because but if it remains open and we price higher, just a little bit below higher before the London session, then we might see London session continue lower prices, and New York session might either continue lower or reverse. So that is the two scenario that you can easily expect in this market tomorrow. So let's go to the dollar index, which is the dollar, or the daily chart, and see how they are correlated. So this is the Euro US dollar daily contract. Sorry, the XY daily contract. So we can see we have this a weekly opening gap. This yellow, the difference between this yellow gap, this yellow line here is the weekly opening gap, because we open and give up this gap today. So we've already taken the weekly in on euro. On dollar, we have already taken this buy buy side liquidity, which is opposite to euro. Euro, we did not take the sell side liquidity. Now this is what we might refer to as SMT divergence, but it still look so bullish on the XY. If it was a liquidity strip, we were supposed to see a decline in price, and also we have swept above this level too. You can see we have swept above that level as well a little bit, and we've priced into the a monthly fair value gap, which is a CB. And also, if we price higher, we have this daily bearish order block, which create a swing high that have a buy side liquidity resting above it. So if all these things did not hold price going forward, so we are looking for higher price. We might see a higher price tomorrow, but maybe Wednesday might have a decline in price. Tomorrow is Tuesday, so we might see price larry higher, then Wednesday might come lower. I, I don't know. Let's see how tomorrow deliver. Then we can now use that to work with Wednesday. So let's not try to project everything on a particular day. I'm just doing these videos to give you clue on what to look out for tomorrow and what I'm actually seeing in price. So that doesn't guarantee profitability for you. That doesn't guarantee that it is going to play out as I call out. So but it's just best you watch the video, and don't let whatever I said here be a guide to you. If you see different thing on your chart, work with what you see. Right, but just be open-minded in this game. All right, so that is that is it. So let's go to the euro dollar 4 hourly contract. So this is the euro US dollar 4 hourly contract. Well, there's something I forgot to say on the daily that time. Given that we just tap on the monthly fair value gap, or BC, we are to be careful and engage with caution on the market. Just like I have said, right? Since we already tapping on the monthly fair value gap, or BC, I'm not anticipating for that monthly fair value gap to lead to a decline in price lower, but I am expecting the market to go through it. Since it is a monthly fair value gap, we might see a daily reversal. All right, so there are two things involved. Either we price above it very fast, or we see a daily reversal, then we use that to definitely clear any to engineer liquidity and to clear the anybody that engage with that parameter. Now my draw on liquidity still remain the sell side liquidity, which is the equal low plus what previous day low profit plus the daily sell side liquidity I call out. This particular swing low is on the daily, so that's what I call out yesterday on that daily price. So which is the sell side liquidity. So that is my draw on liquidity. Still going further. Then the 4 hour, the Euro US dollar 4 hourly contract shows how nicely Euro delivered in today trading. Now on the 4 hour, we can see that the 1 o'clock AM 4 hourly candle set the leg for the decent sell program in today trading that deliver lower aggressively, leaving untapped fair value gap or CB behind that might amount to a significant draw on liquidity. Now, what I mean short time draw on liquidity. What I mean by that is that this particular candle, which is the 1 o'clock AM, you can see the time written below here. This time, this time. So this candle is the 1 o'clock AM New York local time 4 hourly candle. So it will leave a fair value gap that remain on tap. Now, meaning this fair value gap might lead to a potential draw on liquidity that is a reversal. So like we are pricing towards it now, we might reverse into it and use it to sell. So your eye should be on this particular area. So it might be a very influential to price. If we get to it, then we could see a decline in price. That is a reversal and continuation. That is basically what I'm trying to explain. Now, casting forward, I am anticipating the 4 hourly fair value gap to set the sell program in tomorrow price if market trade to that level, which is this level. Then my 4 hour draw on liquidity remain previous day low, which is this low, sell side liquidity plus equal low, which is this low, sell a leg with the other to create equal low. This is basically an equal low here, and plus the daily sell side liquidity, which is this sell side liquidity. So I'm calling all the points that liquidity is lying below it. So and I'm basically calling them so that we can have that as a potential target. So that's basically it. So let's go to the XY daily contract and call out some of the thing we have there as well. Well, this is the 4 hourly contract on the XY, and basically what we can see here is we have the 4 hourly bearish bullish breaker, which is breaker block. This particular candle, it is referred to as a breaker block because we find a low, a high, a lower low, and a higher high, swept tripping above here. This is referred to an ICT word, bullish breaker. So if price did not respect this area, we break this area, then we are supposed to look towards this to support a bullish move. But currently, we can look at this area, which is the 4 hour fair value gap or BC to hold price. And again, we have an imbalance here. Well, we already tap on it, we did not leave it. So we already tap on it. We might come to refill all the because we have not filled the whole gap. There is a potential reason that we might fill the gap. So we have a fair value gap here. We also have one here. We have an volume imbalance here. So this is every reason why I say that we are so bullish on this market, and there is reason that we might price up to this daily bearish order block. And also don't forget, we just tap on the monthly fair value gap or CB on the XY, so that might also have a little effect on price, even if we are expecting it if we are expecting price to run through it. That is it. So let's go to the hourly contract on euro. So this is the euro US dollar hourly contract. Then the euro US dollar hourly contract shows nicely the intraday price delivery for Monday 5th February 2024 contract. Now the daily profile is an obvious 3 o'clock AM New York local time as the high of the day that swept the short time swing high and tap on the 1 hour bearish order block formed on Friday 1 o'clock PM New York local time up close candle, which set the sell program into the price. What I'm indicating there is that in today price, this particular candle formed the high of today price and it swept this equal highs, this swing high. If you see there is an hourly swing high here, we have this is lower, this is higher, and this is lower. We swept that swing high and the high is created at 1 o'clock AM New York local time. We swept it at 3 o'clock AM. Then we also price into this fair value gap and into this what bearish order block, this particular order block, and it's created on Friday 1 o'clock PM New York local time. So we have series of what three up close candle that form a significant what order block, bearish order block here, which lead to this particular sell program for today. Now the low of the day is formed at 1 o'clock AM New York local time that form equal low with the weekly internal range liquidity, leading to a potential draw on liquidity at that price, meaning this price form an equal lows just like I've been saying, and this candle is 10 o'clock AM which form the low of today price and it form equal low with the weekly internal range liquidity. Now, casting forward, the 1 hour identified fair value gap or CB formed at 4 o'clock AM New York local time should form a characteristic of an ICT bearish fair value gap if we traded back into it, which is what this is what I'm referring to. And also we have a bearish order block. So market might not be willing to trade into this since this 1 hour bearish order block also tap on that fair value gap already, because the fair value gap begin with this candle and this candle low and this candle high. So let me expand this so that you see it clearly. This candle low, this candle high, and this candle low form the fair value gap, and you can see we this candle actually tap on it. So there might not be a reason for us to get into this area. So if during the London session, which is 8 o'clock AM Nigerian time, so if you come by 7 o'clock AM, you sit down with price, you look at this candle. If we have not taken this sell side liquidity and we are basically consolidating at this point when we wake up, then we might actually, we have a swing high here. With any swing high that is formed before 2 o'clock AM, we will mark them out. Then if we swept that swing high, then we're going to use this particular bearish order block to sell. So if you actually anticipate for this and like let's say you take a trade on this fair value gap and you on this bearish order block and and market take you out and price into this, you can also participate. So you can risk low here. If you are whatever you are supposed to risk for the day, you can divide it into two. You risk here and also risk here. So I'm um just adding that as a context to help you going in tomorrow. So let's go to the dollar index. Also on the dollar index, we have this buy side liquidity here and we have this fair value gap here. We also have this bearish order bullish order block which we already tap into. And if we break below this, so if the dollar index break below this, then we might anticipate for that fair value gap we call out on the euro. So we might decide to use that. And also we have a fair value gap here as well. So we might not get here. This is a bullish order block. So we might just stop here. Well, with this, my time is already over. We have come to the end of today market review. If you find this insightful, please do follow us subscribe to this channel and share this video with friends and family that are interested in trading. So thank you so much. God bless you. See you tomorrow.